What is up, everybody, and welcome to the crypto and Bitcoin bear market. That is a strong statement, but I'm standing by it because when we look at Bitcoin's longest standing trend of at this point right around 11 years old, we have to respect this trend for its accuracy until it proves to us that it is no longer reliable. This is no financial advice. I would not recommend betting against this trend ending until it proves to us, which is totally a scenario that could happen. But until then, we must expect the same, and this time is not different. There will be no super cycle, and there will be no altcoin season, as most people remember altcoin season. Now, specifically just touching on the last altcoin season in 2021, there was about 1,000 times less coins as there are now. So pretty much every coin in the top 100 in everyone's available view list was pumping like crazy. That did not happen this time because there is so much more altcoins that the liquidity has just been spread thinner and thinner across them all. But if you do look at the totals, like total 3, we did in fact have an altcoin season to new all-time highs. It just wasn't in a small select number of coins. It was spread out. Now back to the 4-year cycle and Bitcoin's 11-year trend. Something dramatic just occurred just 1 week ago, and that was the top of the Bitcoin bull run. If you notice on this chart here, I have it labeled out. The 4-year cycle is a 3.9-year cycle consisting of a bottom to bottom pattern. Within the bottom to bottom pattern, we have an exact to the week tick bottom to top of 152 weekly bars, or 1,064 days, followed by a 364-day bear market. This has repeated not once, but twice, and potentially for a third time, completing which would be a 12-year trend that remained intact. Now, of course, this can end and we can go higher, but Bitcoin must prove that to us. We cannot discredit the 4-year cycle seen on screen, which again, the top we just put in on Bitcoin last week, approximately 9 days ago or so, at 126,000 was the top, and we are expecting a 1-year bear market of a 50% retracement. Now let me just jump over to a different chart here. I have the same chart here laid out, just so you might be able to see it a little differently, a little clearer. Can even jump over to the monthly chart. Again, this consists of a bottom to top to the exact tick, 1,064 days on the weekly time frame. A repeating pattern that we must anticipate will repeat again. Now, the main purpose of this video is, to confidently say I think the bear market has started until proven otherwise. And we have this trend But do we have a complete Elliott wave count to confirm that the trend may in fact be over or can over as well? Can be over. Excuse me. And yes, we do. And I would like to go over that count at this time, starting on the weekly. From the lows. Excuse me. From the lows at 15,000, we can count a completed impulse, which consists of our initial wave 1, flat pattern in a 2, expansive wave 3, consolidation in a 4, and an extended fifth wave. Within that extended fifth wave, a very large, you could call extended wave 1, and overall a pattern of an ending contracting diagonal. In an ending contracting diagonal pattern, it must be a 3, 3, 3, 3, 3. Every wave, the 1, 2, 3, 4, and fifth wave within the final fifth wave must have the right look, must have the right shape, must be all 3-wave patterns. Now if we jump down to the daily time frame, starting from the low of our wave 4 down here around 52,000, we can count a clear A, B, C. 5 waves in the C. Now this C did extend to the 2.618, which is slightly uncommon for C's, more common for impulses. But of course, a C wave is an impulsive pattern, so we do have to consider this a reality. Came right to the tick to the 2.618 extension. This count can be seen as an ABC, 3-wave pattern with a long extended C. From there, we chop down in a very clear corrective pattern, series of 3s. You can label this whatever you would like, a WXY or even a WXYXZ. I have it blank right now just so things are a bit more clear. From there, we would be looking for another 3-wave move, which we can clearly see as a impulse here into an A, followed by a 3-wave retracement, followed by another impulse into a wave C, creating another ABC for our 3rd wave to complete. The A was very long and extended, so of course we weren't necessarily looking for a big long extended 3-wave or C wave, just like we had over here. And also, if you consider the rule of alternation within Elliott waves, this is an exact alternation in pattern. With an extended C wave on this side, we had an extended A wave on the next impulse, followed by a small C wave extending to the 0.618. At this point, we had a expanded flat pattern, 3 waves into an A, 3-wave chop into a B to take out the high of the origin of wave A, followed by an ending contracting diagonal impulse into the wave C, coming right into target. At this point, we had a new impulse develop into our wave A, and we pulled back in 3 waves quite deeply to the 786 Fibonacci. We hovered around for a bit, and my last video that I put out, we were down here at this B wave low, and I said there's a very high probability we go back up to $125,000 before taking out the low to our left here, which was our C wave low. That in fact did happen, and what has happened after that has been a very vicious reversal. Now there's still a bullish pattern here that can be seen, but because of 4-year cycle timing, we must conclude that this was the top until proven otherwise. So we had a finished ABC into our final and fifth wave that did truncate the top of the trend line quite slightly. If you also notice though, we have a nice 3 drives pattern here into the high, giving even more probabilities that this count is correct. If not evident from the very harsh reversal. Now, when we jump into the smaller time frames, what's going on very locally? Because of this large, strong move down, which I'm sure anyone in crypto was aware, mass event liquidation across the board, specifically on altcoins. Also on this exchange, I am on the Bitstamp exchange. We did not put in a large liquidation wick, which gives us a picture of something quite unique happening here. As far as I'm aware, this is one of the only exchanges that did not put in a large liquidation wick. We have a very clear series down here of equal lows, which when you have equal lows, equal highs on a chart, they're just quite obvious for draws on liquidity. Price usually will gravitate there sooner or later, and we may even get this in the short span of this video here. Now, because of this large impulse down to the bottom here, we can kind of conclude that it is an obvious impulse. But how do we get there from the top is a little tricky, mainly because our first move down looked like a 3-wave move from a glance, especially on higher time frames. But if you really look at this, you can kind of force the 4th wave in there to count an impulse. Well, at this point, we kind of have to because of what came. So from the very top, we have a nice wave 1, followed by a retracement for our 2, another 5-wave impulse, which we can deem another wave 1, 2, 1, 2. So a triple 1, 2 expansion down. And I will call this here, because we consolidated a bit sideways before putting in a final 5-wave impulse to the downside, which on this chart I do not believe took the low. It created equal lows, but I would say it's a very clear 5-wave impulse here with the truncated 5th wave. And we have our first impulse complete, as you can see, followed by the previous 1, 2. Our 3 was completed down here. We had again a very awkward correction to the upside, which looks like it was a 3-wave pattern to the upside, and then we saw a retracement, and we were expecting kind of a little bit higher here on price, so we did not have this odd truncation at the top. Now most Elliot Wave analysts will probably be confused by this price action up here. It's just a little weird and hard to count, especially on the lower time frames, though Elliot Waves is not designed to be perfect 100% of the time. We have to work with what we're given. So in this scenario, if this was to be a wave 4, We ranged around the 382 Fibonacci, which is common for your wave 4. We did not actually hit the 0.5, which is also good for a confirmation of a wave 4. We can count this as an ABC to the upside and a W, followed by an ABC zigzag into our X, followed by another ABC flat pattern or zigzag into our Y. The Y did not breach the high of the wave W, so it is a truncation, which is a rare pattern here. But what is clear is the move that came after. A very clear impulse to the downside, which again, if you were expecting this to be some type of maybe truncated fifth wave as an impulse, or an impulse here, you were looking for a wave 2 to the downside, which again you would want to hold around the 786 level at a maximum. This one came and retraced all the way to, I believe, 90%, which would basically invalidate a wave 2, especially on Bitcoin. Let's see, toggle on the 89% here. And yes, we came all the way down to about 90%. And in a clear impulse too, so no subdivision structure. So we could view this as part of our, we'll put this in green for the moment, part of our fifth wave that we are looking for, because remember the pattern that came before us. We have a completed impulse here, and we're looking for the impulse behind it to follow. So we have a 1, 2, completed 3, completed 4. Now we're looking for the fifth wave. In the fifth wave, we need, of course, 5 waves. And as you can see, the structure is quite big. If this would be our first impulse of the fifth, we would need to extend quite deeply down into this third wave, which at this point is $104,000. What that could look like is the 1, 2 definitely being in. This move down most locally here, we could also get another 1, 2, or it could be the internal structure, of the 3. But ultimately, price looks like it is coming to target down the equal lows here at 109,700. There's also, if we zoom out a bit, quite a bit of ungrabbed liquidity on this exchange at these lows over here. Also, I have that final low down there mapped out and a monthly level sitting down there as well. Also, if we look at our liquidation heat map, the largest draw on liquidity is sitting around 94,000 actually. So if if this count is correct, we would be expecting quite a strong pull down to 107,000 at least. I would like to see these targets hit at 104,000. Just for the time being, we would look for a structure like this, perhaps a larger wave 4 again to back test support before we come back down, potentially all the way as low as that 94,000 liquidation point. Doesn't have to come that low, but it's a potential. And we jump out onto the 4-hour. Actually, we'll go back to the 1 hour. It's a little more clear. from the very top of our move, which would be our bull market high, we would have a completed 1 2 1 2 1 2 3 4 5 4 1 2 3 4 5 4 1 2 3 4 5. And what that would do would complete the whole structure. Your triple 1 2 at the top would have a connecting 3 4 5 for each string of 1 2s. And again, it could get very ugly, it could get very deep, because this is an impulsive pattern. If it is to be true, we could expect all the way down to the yearly open around $94,000. If we do come down that far, you would expect, let's say we're more conservative here, and maybe we come around 100,000. You would expect at this point the bear market to be confirmed, because you started a move with a confirmed large impulsive structure, pretty much invalidating any C wave because of target overshoot, which I will go over here in a little bit. From that point, you would be expecting a larger, time consuming, potentially aggressive or more sideways pullback, retracement, bearish retracement, wave 2, before the very large wave 3 to come. Again, this whole wave, whole structure to the downside would contain within it just the wave 1 of a larger impulse. There you would have your either quite aggressive retracement in a wave 2 or more sideways consolidation before ultimately the big move that sucks the markets to new lows and pretty much confirms the bear market for everyone. Okay, so enough bear talk. What do we have if this is bullish? What are we looking at here? Let me jump over to another chart. I think I have it somewhere. Yeah, here it is. Go on the 8-hour, actually the daily to start. So instead of our ending diagonal pattern, we can count a completed impulse here, which would be our wave 1. And we can also count a potential completed pattern here, or soon to be complete, where we have the same expanded flat, ABC. In this case, it is into a wave A, followed by an expansive zigzag ABC, taking out the origin of the wave A high, which is creating a larger expanded flat pattern, 3 waves into the A, 3 waves into the B, impulse into the C. Now for this pattern to be correct, as you can see on this exchange and most other exchanges, we already wicked into the 102K region, which is your most common extension targets for wave Cs and expanded flats. We have already wicked into this, not across every exchange though. So also we would like to hold this area for the bulls, the 1.618 extension at a maximum of around 98,000, anywhere into from 104 to $98,000. Again, if this is a C wave, of course you're looking for that 5 wave pattern to play out to the downside that we just went over. But the main difference being that you want to see $104,000 to $98,000 hold on the 4-hour and the daily time frame, preferably. So if we do come down here in some type of completed impulsive pattern, the big and most main difference that you would be looking for at this point on the chart would be, instead of that three-wave pattern that we were just referring to in the bearish scenario, you would be looking for a large new impulse to the upside. So at least taking out all-time highs again. And again, at this point, if any high is made at any point in the future, outside of, the next couple years, the 4-year cycle is broken. So say this count does become correct. We do have this large wave 1, and we're completing down here somewhere around 104,000 to 98,000. And this is key here, and we go on to make a new all-time high. That is the point where I will become a bull again, because the 4-year cycle will be completely invalidated. Again, if you just to explain, the high that was put in here on October 6th at 126,000, that was on the 1,064 day level on the weekly time frame. The next week has already passed, which was, October 13th, I think. So any point a new high is made, say this count becomes true, that 4-year cycle level, because it has always historically ended on the 1,064 day level, bottom to top, will have been broken. And at which point, only at which point, we can expect, the more bullish scenario to start playing out, the super cycle to start becoming a reality, a real true extended alt season to start becoming a reality, Bitcoin towards $200,000-$300,000 becoming a reality. Now, if you just take a glance at the world, at economic situations, you can kind of tell the really, I don't know if that's a strong bias to have based on the world situation, based on inflation and everything like that. To me, it's more likely that we go into a bear market until things settle down and the next cycle can begin. Just given the exact timing, not just the exact timing, but also an exact completed pattern via Elliot waves, and not just the exact timing and a beautiful completed pattern, but also the 3 drives into the high up here. 1, 2, 3. Everything's aligning for that to be the top. And of course, one could say, this is just the fear liquidation grab before we go on to the super cycle. Which again, I'm totally open to that being the case. But it's not going to be the case until Bitcoin proves it to us by making a new all-time high.